Well, he was briefly China's richest man, eclipsing even Jack Ma, the founder of Alibaba. His Hong Kong-listed solar company was worth up to $40 billion. But Lee Hae-jun has taken a personal $11 billion bath. Shares in Hanergy Thin Film have crashed, and his company is under investigation for market manipulation. Hanergy's market value had grown sixfold in a year, making the company bigger than its nearest dozen competitors put together, and making chairman Lee Hae-jun famously wealthy as he kept a controlling stake. Analysts had long been baffled by the constantly bullish pronouncements, especially for a company with opaque accounts which sold most of what it produced to a privately held Chinese parent company, the Hanergy Group. When the AGM came around, Chairman Lee didn't show. The vicious turnaround started, and by the following day, late in May, its shares were suspended, having fallen almost 50%. Well, Chairman Lee's putting a brave face on it, but it all looks to be unravelling. Two independent analysts took a trip out to Hanergy's largest factory in Guangdong province, and this is what they found. An enormous plant that was basically idle. Hardly any cars in the car park, no sign of deliveries or production, solar panels around the building but placed where they wouldn't get much sun. Well, one of those analysts was Stevenson. She took those photos and they were published on John Hempton's Bronte Capital blog. I spoke to her from New York. Stevenson, thanks for joining us there.
Well, thank you, Tiki.
You were actually with John Hempton a couple of months ago when you went down to Hanergy and kicked the tires. How did it look to you?
I was so thrilled he was willing to come with me to deep, dark Guangdong province. There wasn't a lot going on there. There were a few ladies outside clipping weeds, and there were a couple of Western guys walking out of the plant. I figured they might work for, I understand that the plant actually has equipment from Oerlikon, so they might have been that, but there wasn't a lot of manufacturing going on.
Now, this is a multi-billion-dollar company whose value almost halved, I think, in about 24 minutes. What triggered the crash?
I think that what probably triggered it was bank calls on the shares, because there were a lot of shares that were leveraged for debt. But, you know, it's a classic of a certain type of Chinese company, because, you know, what's happened since Chinese companies started to become private and get listed is that the real ownership behind the companies gets obscured. And what happens then is that they're able to transact one company with another without the shareholders ever knowing. So you can create the appearance of big cash flows when actually nothing's happening.
Now, it turns out that the founder had taken out a loan against shares just before the price collapse. Why did he do that?
Well, I think just that the shares became very valuable, so he could use them to raise debt, and then use the debt to create transactions, and then use the new value of the company to raise more debt. It's quite a common pattern. And because the shares are, fundamentally not worth a whole lot when they crash back down to earth, it's not of great consequence to him.
So he was effectively shorting the stock?
Yes, exactly.
There are reports that Lee Hae-jun actually lost $14 billion of his fortune in one day. But you're saying that's missing the point about the agenda of these founders.
I think it is. I mean, the companies themselves, companies like Hanergy, exist in order to create the appearance of value, to raise debt, acquire assets, and so forth. But generally speaking, the management teams and the chairman find value take value out of the company. I mean, look at Evergrande, for example. I think in Sydney you just sold one of the big properties of the chairman of Evergrande, which is another company that's kind of similar, although there's more activity than in Hanergy. The goal is to raise the apparent value in the company, but to take real value out of the company in terms of cash flows and put them into property overseas.
You say in your report that it may not be an exaggeration to say that all mainland directors of listed companies strategically move assets from the listed companies to private assets, often real estates and overseas. It seems to be an endemic problem in China.
It does seem a little harsh to say all. I don't think that people start out with that intention, but the stock markets are really, so overvalued, and the companies trading on the markets, I think when you're inside them as a management team, you realize the gap between perception and reality, and so you try to secure some real value by taking it out of the company.
So for Hanergy, who are the winners and who are the losers here?
Well, the winners would be the management team, right? The losers are the people who hold the shares, that the poor group of retail buyers who didn't know any better, and the banks who are holding the shares against debt. Most of the shares are held by insiders.
Now, the ownership of Hanergy, apart from the chairman, is also very cloudy. How many other sham companies like this are there in China?
Quite a few, I'm afraid. It's really the easiest way to make $10 or $20 million and I think that a lot of people really do want to build a real company. The problem is that they don't have to take any personal risk. So, with Hanergy, for example, really the company was spun almost entirely out of thin air. It got a very large loan from the Chinese government. It used that loan to create the appearance of contracts. The appearance of contracts allowed the Hong Kong company, allowed it to reverse merge into the Hong Kong company, and the Hong Kong company became very valuable. So suddenly you have a company based on, very gossamer.
And why has this been allowed to happen from the regulator's point of view in China?
Well, it's the Chinese the Hong Kong regulators have tended to be much better regulators on the stock market than the mainland regulators. On the mainland, it depends on where it's listed. For companies that are listed overseas, like in the U.S., I think the Chinese regulators generally feel that it's not their responsibility. It's U.S. investors. For the mainland markets, there's a whole mess of problems. For Hong Kong, those have generally been fairly well regulated, but there's a lot of insider trading and there's a bubble going on, so it's easier to create that sort of company.
I mentioned the cloudiness of ownership at Hanergy. What should we make of Alibaba?
Well, who can know what to make of Alibaba? You have roughly 300 companies that are related to or operating entities of Alibaba. Even if you were the COO of Alibaba, you wouldn't be able to know what was going on in those 300 companies, much less shareholders on the outside. It's a multi-headed hydra, and there's really no way for outsiders to know.
The Chinese stock market generally has rocketed. The Shenzhen Composite Index is at a PE over 60. What does that say?
What it says is the Chinese government is getting kind of desperate about trying to find a way to keep the economic momentum going. So they keep on putting new cash into the economy. Loans are no longer really, there's not a lot of loan demand. The property market is dead, and so the stock market is the one place for the money to go.
If there is a broad stock market crash in China, do you think there will be a backlash on capitalism?
I think there will be a backlash on the Communist Party, very likely, because the central government has pushed this bubble to the extent of their ability. They've encouraged everyone to put their money into it. Eventually, when the market crashes, I think people will feel very bitter about that. I don't think about capitalism generally, but about the current leadership of the country, very likely.
And do you think a bust of this bubble is likely this year?
You can't tell when it's going to happen. It will happen. Exactly when is impossible to say. My guess is probably within a few months, but you never know. It could be tomorrow. It could be a year from now. It won't be more than a year, and it won't be less than tomorrow.
And Stevenson Yang, very good to talk to you. Thank you.
Thanks, Tiki.